Yo, what is up, Pippin and Dippin family? It's Hunter here. I'm about to shoot you a awesome video over hidden divergence and divergence, regular divergence. But in the meantime, I know Joe's not here. He's out with COVID, but he told me to tell you guys that he will be back for sure, and he misses you guys. So, before I start, man, hit that subscribe button, hit that like button, run these videos up, because guys, there's people out there that are looking for this type of information that's broken down in a very good way. I'm not saying that we're the best, but we have been getting some awesome feedback from you guys and other people as well, about our videos, how pure they are and how we break them down. So what I'm going to do, I'm going to get right into it. I'm going to share my screen, and I want to show you guys some setups using hidden divergence and regular divergence. Guys, this is not all be all, okay? This is something that you can put in your trading plan. This is something that you can put as confluence for when you're taking a trade, because it's very powerful. I'll get started. All right, let me break that down. Let me share my screen and potato. All right, this is going to be a quick video. It's not nothing too hard. I just wanted to bring some value to you guys this week. I know I missed a couple weeks, like I said, Joe's out for COVID. So here we go. You guys know, if you've seen any of our videos, we go over market maker method. That's how we trade, and we trade away from the peak lows and peak highs, okay? So we know for a fact, check this out. We know for a fact, let me bring this over here. We know for a fact that we have a peak formation low here, correct? We know that. We can go to the 1 hour time frame. This is the 1 hour time frame. Go to the higher time frame, and you can see, guys, we had a very big, push down from USD CAD. Okay, we know that we have this set. This low never got broken. We started to trade above that, right? So we'll go back to the 1 hour time frame. So as we see it, peak formation low right here. Now pay attention. I want you guys to pay attention to this right here. Boom. We know that and establish that. Boom. Okay. And you guys know, if you watch any of our videos, you know what's next. Okay. You know what's next is our signature set. So we're trading away from the peak formation low, right? And what we want is inducement, pullback. Typically, we're looking for three types of patterns, right? Type 1, type 2, type 3. Make it a more high probability setup. Would be awesome to have a 1 hour sharp fin, right? So I'm gonna box these in, because we did stop hunt to the low here. It's not a 1 hour shark fin, but it is a good set, okay? Even here, okay? You guys know I'm gonna drop down to the 15, okay? I'm going to drop down to the 15-minute time frame. I mean, I can even go through this week. We got a good one here. Right here. It was a great trade, and I'll show you why. Okay? But in the meantime, I want to show you the reason why these sets are high probability. First off, I'm going to show you in the 1 hour time frame real quick, okay, a hidden divergence. Okay? This is hidden divergence is for a continuation, okay, if you're in a trending market. Which in this case, we were in a trending market in the upward position, right? So what I'm going to do, from this previous low here, okay, it goes up to this previous low. We know that, right? But on our TDI, it is telling us something different, correct? All right. So you can see how this low was higher, was higher than this low, right? But this low was here, which was lower than this low, okay? This low was higher. Well, why is it telling you something different? This low is higher and this low is lower, right? So this low is lower, this low is higher. On the TDI, it's telling you that this low is lower and this low is higher here, okay? It's telling you something different. That is hidden divergence, okay? Now, let's bust down to the 15-minute time frame. Let's go look at these sets. Okay, bring it over. There's our peak formation low. There's our first trade, okay? You guys know, if you haven't watched that video, Go and watch that video on our 3 types of patterns, 3 types of M patterns and W patterns. Okay, you got a type 1, which is outside of Asian, a type 2, which sets up on the bottom and the top of Asian, and a type 3, which sets up in the middle of Asian. Okay, in this case, we got a type 1. Okay, now you can see, I'm going to delete that. Now you can see across the board, okay, we have a low here. We'll start from here. Go here to there, okay? With this example, we do not have divergence here, okay? But we do have it here. You see how this low came up, came back down, came up, came back down, and you can see, guys, that it is starting to form a regular divergence. This is a great confluence to add to your trade, for telling you that this trade, the market is losing momentum going down. It's ready to reverse, right? You can see here that you have equal lows here. It's coming to the same area, okay? And then you have regular divergence. Not only do you have hidden divergence telling you that your market direction is up, okay, on the higher time frame, but you have regular divergence on dropping down to the 15. Remember, 1 hour shark fin. This is not a 1 hour shark fin, which is okay, but it did give you your pattern inside the 15 minute. When you know your, guys, pattern, timing, cycle, okay? What have we established here? We established our pattern, which is a type 1, our timing, right? We're trading in New York session, and our cycle. Which way is our cycle? We're trading away from the peak formation low, right? That's simple. Execute the trade. So execute the trade right here, close above the 13. We entered the market there. Stop loss was there, right? That was a 23 pip stop loss for 40 pips. Easy. Easy 2-to-1 trade. If you held, you got a little bit more out of it, right? But I'm more or less an intraday trader. I like to get my move inside the day, because I know that you can, and then get out and wait for the next day. You can clearly see, boom, inducement, pullback. What's our next move, right? Same thing. If you were trading inside of London, you caught this. But look here, guys. This is regular divergence. You can see it here. Okay, this was one of the shark fins on the 1 hour time frame. Okay. I'm going to delete that line that we had for hidden divergence. Okay. Now look, this is a trade set. What do we have? And this set up in 2 sessions. So this is a multi-session W pattern. Left leg was here in Asian. We don't trade in Asian. Neck. Right leg. Boom. Okay. What do we have on our TDI? Right? Also an out of the band, into the band. Okay. That's a part of the TDI method. It's in our TDI video. Okay. It's just an extra confluence. It's high probability. Look at the divergence there. We even have a low here and a lower low here. Okay. Why is that? It's telling you something different here. Momentum is gone. It wants to shift. Okay. Entry, close above the 13. We're closed above the market baseline with the RSI on the TDI. Stop loss behind the structure. Okay. This is simple stuff, guys. You got to make trading simple. Okay. Yes, I have EMAs on my screen. They're vital. Okay. I teach on those too as well. 10 pip stop loss on USD CAD. For 20, 40, right? 10 pip stop loss. What's a 40 pip take profit? That's a 4-to-1, guys. Easy money. Okay. Turns around and does the same thing the next day. Gives you a type 1 pattern. Okay. This right here, guys. Type 1, a type 2. The reason why is because it sets up on the bottom of Asian, right? Another type 1. What do we have? We have divergence across the board. Okay. We have equal lows. left leg, neck, right leg, up, entry, a little bit of a pullback here, and then boom, she takes off. Okay, what we have, 10 pip stop loss for 60 something pips, maybe 70 if you held. There's a 6 to 1, guys. Easy, 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 easy money. Okay, and it's vice versa, the same way coming down. I'll show you an example on hidden divergence. You guys know how to read divergence. Okay, it's just like this trade set. If we were to take this M pattern, which was very nice, this was news induced. Okay, we had this is NFP week. Okay, so same thing. This is an M pattern. Okay, I wouldn't have took this trade. There's numerous reasons why I wouldn't have took this trade. Okay, you know, it's not smart to take an entry right when the newsletter hits, right? Like if the news comes out at 9 o'clock and you're trying to take a trade at 9 o'clock, it's not a smart idea. The reason why is because it could possibly make a liquidity spike and then it completely go the wrong way. Okay, so go the wrong way up and just knock your stop loss, and then eventually go the right way, or it could just smash down into the right direction, your way, right? So right here, but I wanted to show you the regular divergence on the M pattern. Okay, look how we got, this is a little bit higher. Okay, just a tad, which is okay, tad bit higher. Look at your TDI, out of the band, in the band. Boom, boom, telling you something different. We're over. And two, guys, when you're overbought and oversold, it becomes more high probability when you get sets up like that. Like right here with this type 1, look at what was oversold. Boom, money shot, money shot. Okay, look here. Here's another one, type 2, setting up on the bottom of Asia. You see how it came out and went right back in? It's considered a type 2. Okay, left leg right here. Our direction's still up, guys. Left leg. The divergence wasn't strong. Really ain't really no divergence there. But the reason why I say that it has some divergence, like you have a low, it made a lower low, and this is equal. They're equal here, right? So when I see that, I'm like, okay, there is some momentum loss here, and our direction is still up. I'm still trading away from a peak formation low. Okay, entry was right there. Wow. Okay, stop loss right there. You could put it a couple pips past. It's fine, just to be safe. 14 pips. We'll just say 15 pips. There's 2 to 1. 45 is what? 3 to 1. 60. We gonna get it? 4 to 1. Money shot, guys. Money shot. USD CAD is an awesome pair. Okay. So I wanted to show you guys that. I'll beam to the hour time, and you can read hidden divergence on the 15-minute time frame as well. It's just there's just a lot of noise. It's just a lot of noise. I just look for my entries and my pattern type on the 15-minute. Okay, the hours are going to be your best bet to read divergence on as far as hidden divergence, because you know you're looking at your pullbacks come to the 50, right? 1 hour shark fins, stuff like that, and you can read it easily on the 1 hour time frame. So let me show you an example of a hidden divergence for bearish. Okay, that was bullish, right? To read the hidden divergence, you're going to be drawing on the bottom of RSI. For hidden divergence, you're going to be drawing on the top. Okay, regular divergence you draw on the bottom for bullish, on the top for bearish, right? Okay, so right here, this is a perfect example. Okay, so let's take this high right here. Okay, I'm gonna box it around, and just say we're totally in a bearish market, right? So from this high, let's just take this high, or any of these highs that we're in a bearish market with. Let's just say all of them, right? Let me see if I can get a better example. Okay, right here is a better example, but this is a good example. I'll do both of them, okay? So right here is a high, okay? So I'm gonna draw it on the TDI to where that high is, okay? And then I'm gonna draw it on the price from where this high is to that is. We'll even draw it to here, to there, okay? That's a good example, okay? So that high is higher than this high, right? This high was higher. But why is this one higher? This was lower on the TDI, right? Continuation. It's telling me that that is continuation, hidden divergence, okay? Same thing here, right here. Let's mark it up. From this high, oh man, sorry about that. From this high to that high, okay? This is higher, that's lower. Look at the TDI. There's that high right there, right? And then boom. And then look, guys, this makes it even more powerful. I want to show you this set, okay? I'll go on to the 15. You got hidden divergence. You know that. You got to pull back to the 200. You know that. You're on the 1 hour time frame. You know that. You got a peak formation high. You know that. This is, guys, this is very, very fast to go through, okay? Peak formation high. Boom. You're here. There's no price to the right, right? You're seeing this. You got hidden divergence on 1 hour. Bam, baby. You got a shark fin on the 1 hour. Bam, baby. Right? Then what's your next step? Box it. You ain't gonna box it. You just drop down to the 15. And let's go. Look at that beautiful M pattern there, guys. Type 1. A type 1. It's pretty. It's perfect. You look for these things, you will win. Watch your accuracy go up to the roof, guys. And I'm not saying I'm perfect. I'm not saying that I don't make mistakes too, guys. I do. I've had and this is no lie, I've had a 72% win rate for the past 3 months. I do 50 trade assessments every month, right? To push myself, right? Joe does the same thing. So, and then look, I want to show you. So we got equal highs here, right? And then what do we have here? We got divergence, don't we? We got divergence. It's money, guys. So, I mean, yeah, there was ways that you could have got in here. You could have got in here and it went down. It was going your favor and then it pulls back, which is fine. If your stop loss is right. So let's just say a 25 pip stop loss to be safe. So if you got in right here, you got your pullbacks. Let's just say a 20 pip. Okay. There's a 2 to 1. There's a 3 to 1. 80 pips is a 4 to 1. 100, 5 to 1. That's a 5 to 1 trade. Easy money. Okay, guys, these are high probability setups, man. That's all you have to do is study this. If you guys are not doing homework, you're doing yourself a disservice. Okay, you think anything that you're good at, think about it. Anything that you're good at in your life, how much time did you put in practicing? A lot. If you're good at something, right? Like me, I'm good at skating, really good at skating. But I put a lot of time into it to get where I'm at skating. A lot of practice, right? I played hockey for 3 to 4 years. Okay, so you got to practice at it, guys. And you got to think about it. I got told, maybe I said this in another video. I'll stop my share, but go back and watch this. This is powerful knowledge. I have one of our guys in our group. He's a 25-year veteran stock trader, and he told me, he's like, man, there's a lot of people that struggle in the market due to the fact of they think they're coming in here, they're going to come in here and they're going to just completely blow it out of the water when you're against the LeBron Jameses and the Michael Jordans in this market, right? That's who you're against. You think that you're not going to come in here and lose a little bit? Come on. You know what I mean? So that's the reason why you should practice, so you can get that losing rate down. And that's what they do. They practice. That's where I'm trying to go with this. So this has been fun. Thank you for all your support, guys. Everybody that's subscribing and liking our videos, thank you. The feedback, thank you so much. You will be rewarded for sure. We're going to be doing giveaways in the future. I'm going to, like I said, this is going to be a short video because divergence is really easy to explain, but I think you should put it in your trading plan as a confluence in your trading. With that, guys, keep pipping and dipping, and I'll catch you on the next one. Peace.